Hello everyone. Today I'm going to go over the operating, investing, financing, non-cash classifications that we went over last time, and then we're going to start piecing together how to create a statement of cash flows. So from yesterday's homework, we had to identify if it was operating, investing, or financing. And so I'm going to just walk you through these real quick. So sold equipment for cash. So remember your long-term assets. When you buy and sell them, those are investing activities, because what does a business invest in? Long-term assets. Purchase inventory on account. This is a non-cash transaction because we purchased an asset not using cash, so that would not appear on the statement of cash flows. Sold merchandise for cash. So in this case, we're selling our inventory. Our inventory is a current asset. So if it's a current asset or current liability, that would be under the operating section. Purchase land and building with cash. Those are long-term assets, so that would be investing. Dividends received on investment. So remember, the payment of taxes and dividends are considered operating activities, and so in this case, that would be operating. Paid wages to employees. That's operating, our day-to-day, paying for our operating expenses there. Our employees are considered operating. Paid maturity value on a short-term note payable. So not the interest, but when we pay the principal back, that is an investing activity. Paid interest due on a short term. So this time we're paying the interest. So remember, the interest, dividends, taxes, that's all operating. Purchase treasury stock. We did that in Module 7. That is an equity piece. And so when we're dealing with owner's equity and long-term liabilities, those are financing functions on the statement of cash flows. And then the last one, we exchange inventory for equipment. That is a non-cash transaction. All right, so that's a quick recap. When you get to your Accounting 1 class in college, you're going to have to identify operating, investing, and financing activities on the statement of cash flows. So hopefully you watched both videos I sent you. You went through the examples I gave, and you checked your answers now to kind of see where you're at on that. So now I'm going to move forward and go over, we're going to kind of start the process today with calculating or creating the operating section of the statement of cash flows. So going back to the statement of cash flows, remember, income does not equal cash. And so the statement of cash flows is showing where cash is going and coming in 3 different ways. And so there are actually 2 different types of statement of cash flows. So FASB, the Financial Accounting Standards Board, when they developed this concept in the late 80s, they allowed 2 different types of methods to create this statement. So the first method, and that's the method we're going to be doing, is the direct method. So the direct method shows you the cash in each of the 3 areas. So in this case, we have $24,000 coming in, net positive amount coming from operating activities. We have $28,950 negative from our investing activities. And if I go to the next page, you can kind of see then we have our financing piece, and then we work our way down to the ending cash balance of $34,400. So what the direct method then does, it reconciles the net income from the income statement and makes all the non-cash adjustments here to get the net cash flow dollar amount of $24,390. We're going to do the direct method. It's an easier concept to kind of understand for a beginning accounting student. The indirect method, what they do is they take net income, and then what they're going to do at this point is they're going to make adjustments to each of the 3 sections to get the net amount. I like the direct method more because it focuses in on the 3 areas, and it shows where cash is going and coming. Where the indirect method, there's a reconciliation process. Your CPAs know both of these. You have to do on your CPA exam. But if you're not going to be a CPA, we just want to kind of get through the concept and understand what the statement of cash flows is showing us. All right. So what is going on here? And this is the 4th statement you create. The balance sheet is talking to the income statement to create this. So there's an articulation between the balance sheet and the income statement, and we're going to use the balance sheet account as kind of the control account. We're going to look at the change in the balance sheet number and how the income statement account impacts the balance sheet, and that gives us our change in cash in order to develop this statement. So that's the process I'm going to start with today. I'm not going to be able to go through the whole thing. So we're going to get through a couple different pieces here. All right, so if you go into Schoology, I put a cash flow document in the Module 8 folder. So if you open that up, that's where I'm pulling these numbers from. So you could kind of just follow along, take notes, and maybe have the, and then you could go back and kind of work through the document. So we're going to focus in on making the cash flows from operating activities. And if you remember, that's anything dealing with current assets and current liabilities. So our currents are operating functions plus interest, dividends, and taxes, the collections of those three, or the payments, if it's an inflow or outflow. So in the packet, you'll see cash flow from operating. There's the revenues, the expenses, current assets, and current liabilities. So now what we're going to do is we're going to kind of show the change in cash in different operating functions. So the first one would be, and you want to write this in your notes, cash receipts from customers. So that's when we're collecting cash from customers. When we do that, we're collecting off of those receivables. And so don't forget, account receivables are current assets. So current assets and current liabilities are operating functions on the statement of cash flows. So we're going to use the balance sheet account as kind of the control account. And we're given this information from our financial statements. So our financial statements is going to give us a beginning and ending number on the balance sheet. So in the example problem we're going to do, if we look at the accounts receivable, the accounts receivable has a beginning balance of 190 and an ending balance of 110. And so now, since it's talking to the income statement account, we're going to look at, well, what account does accounts receivable kind of work with in journaling and transactions? It works with the sales account. So when we make a sales, remember the journal entry, when we sell to a customer on account, we debit the receivable and we credit sales. So the receivable goes up and the revenue goes up. So how does sales impact the receivable account? It makes the receivable account increase, and you can kind of see that here. So whenever I do that journal entry and I record a sales on account, the sales number for my income statement makes the receivable increase with a debit. So it's kind of like a little puzzle is what we're doing here. We have the balance sheet has given us the beginning and ending number. The income statement has given us the sales amount. And then we have to ask ourselves, how does cash impact the receivable? Remember, when a customer pays us back, we're going to debit cash and credit the receivable. So the missing credit over here that we're trying to solve for, this is going to represent the cash collected from the customers. And that is going to go on the statement of cash flows under operating section. So you can see how we're using the balance sheet and the income statement to solve for the cash. And the way we do that is we use the balance sheet account as the control account. And what I always do is I ask myself, well, what income statement item is it articulating with? Well, it's talking to the sales account. So we're going to use that. What does that look like in a journal entry? And then how does cash impact this control account? It impacts this in an entry that looks like that. Okay, so the receivable goes up when the sale occurs, and the receivable decreases, it gets credited when the business receives the cash payment from the customer. So we're solving for the credit there. So what we could do then, and I'm going to pull up a quick spreadsheet here just to kind of use this in e-learning format. This is kind of the best way to kind of do this. I'm going to have these two side by side. Don't worry, guys, I'm going to be able to do it here. Here we go. All right, so what I ask myself is we're looking at cash collected from customers. So what's the control account I'm going to use? I'm going to use the accounts receivable because that represents the cash collected. So I'm going to plug in the beginning and ending number. So I'm using this from the doc that you have. I'm going to move this up here. And so what you have here is a beginning and ending amount. So the beginning amount in the receivable was 190. The ending amount was 110. Then I ask myself, how does cash impact the receivable? Does it make the receivable go up or down? I just explained that. It makes it go down. So we're solving for this missing credit here. What makes the receivable go up? What is it talking to on the income statement? It's talking to the sales account. Okay, so what I'm going to do then is I'm going to plug in the 900 here. All right, so I have 900 plus 190 minus this credit gives me 110. So I could use algebra actually here to kind of make a little equation to solve for it. So that's one way. So some people like doing it this way. I have a way that I prefer a little bit easier than this, but this works too. So 190 plus 900 minus the credit side, which would be x, our missing element, equals 110. I know all of you could kind of do that on your calculator. Now, another way that I look at it, this left side total is 110 greater than the right side, right? So if I have 900 and 190 and it's 110 greater than the right side, if I just take out 110 out of that side, so I'm taking 110 out of the debit side, I get 900,000. I took the 80 out of the top, I get 980. So I got 980 without even doing the the equation there. But let's take a quick check here. So if you just pull out your calculator, we'll do our equation: 900 plus 190, and then we're going to take out our 110, and we get our 980. Okay, so that is the T account approach to solving for cash paid to customers. Now I'm going to show you another way that people do this that's taught, and some people prefer this way. You look at your control account and you say, well, what do I start with? What gets added? What gets subtracted? And what do you end with? Okay. Now, when I say, well, what do I begin with in the receivable? I began with 190 and I ended with 110. And so then you have to ask yourself, well, what makes the receivable go up? What makes the receivable go up is the sales number. What makes it go down? The cash. And so that's just another way of kind of doing it. I prefer to use my journaling and the T account approach because that's what we've been training you throughout the year. And eventually, when you use the T account, your brain is active in that ledger and understanding how the ledger balance works. And so this to me seems more of a memorization piece, where this is kind of what we've trained you to do throughout the year. However, when you get to college, you can kind of do whatever you want when it comes to this part, but I would definitely use my T account skills to do this. All right, so then what happens is the cash paid to customers, this is going to go on the statement of cash flows. So if I go back to the statement of cash flows, it would say cash received from customers, 980,000 positive. Okay. So if we look at the balance sheet is speaking to us and it's telling us what accounts that we need to calculate, what accounts do we need to kind of do as we move through the problem. Okay, so watch how I'm going to do this. Cash collected from customers, all right? And then we look at cash, inventory, and payable go together. So that's cash paid to suppliers, cash paid for rent, cash paid for salaries, cash paid for taxes. So just by looking at the names, I'm able to create my operating section. And I know that I just made it look really simple there, but once you do these problems a bunch of times, you'll just be able to kind of rattle that off and look at the balance sheet account and kind of get that. All right, so the next one, I'm going to go over one more here with you today. So I'm going to pull up my problem again. So I'm back in my shared doc that I sent with you. And the next one says cash paid for insurance and rent. So I'm paying for a prepaid asset. So once again, I'm going to look at the balance sheet account as the control account. And then I have to ask myself, what account is prepaid rent or whatever I'm looking at here? Which account is it articulating with on the income statement? So prepaid rent goes with rent expense. All right, so now what am I solving for? How much cash should I pay for rent during the year? So I'm going to have a beginning balance, I'm going to have an ending balance, and then the cash paid is going to make it go up. Because when I pay for rent, I'm going to debit the asset and I'm going to credit cash. So how does cash impact the prepaid asset? It makes it go up. It's a debit to the prepaid asset. A lot of people say, well, I'm crediting cash, so therefore the prepaid asset, I'm solving for the credit. No, you have to look at how cash is impacting the asset or the balance sheet account in this way, and what it's doing, it's increasing the asset. The expense is, once I use up an asset, remember I have a resulting expense, so the expense is making the asset go down. So once I have that, here are my journal entries, so that helps me determine what's being plugged in here. So I have the rent expense is listed there, and then there's the asset decreasing, and then cash makes the asset increase. So once I have that under my belt, I'm going to run to my spreadsheet here. Cash paid for rent. So I'm going to plug in my beginning and ending balance. So I run over here. Now it's important when you do these problems that you're grabbing the right number. So the ending 2004 number is 30. The beginning number is the ending year balance from the prior year. We've done this so many times now. And in just all these little things that you've learned throughout the year, you're going to be shocked on how much and how quickly you're going to understand any new information that you get in college, just because you're not going to be sitting there trying to figure out for 20 minutes, where did the professor grab that number from? You know when he says the beginning amount that it's the ending year on the prior year balance sheet. It's going to be a no-brainer. You've done that with ratios probably 50, 60 times in class throughout the year. So all these little things like this kind of add up to build a nice solid foundation for being a business major. All right, so prepaid rent has a beginning balance of 15 and an ending balance of 30. So remember, we're solving for this. Cash makes the prepaid account go up, and then the expense makes it go down. So I'm going to plug in the expense number here, and I have 70,000. So I'm going to just abbreviate here. So the total of these two numbers, the 15 and the cash, is 30 greater than the right side. So without doing an algebra equation, which I could do 15 plus x minus 70 equals 30 and solve and get a right answer. I know that that left balance, the total of those two numbers, is 30 greater than the 70. So 30 greater than 70 is 100, right? If I already have 15 hanging out over there, the cash is 85. All right, so those are the first two that I am going to go over today. I've been talking for about almost 20 minutes, so we're going to kind of ramp it up with that. I'm going to give you, what I want you to do is see if you could take a stab at the remaining ones in the packet, and you could kind of use this as a start, but I want you to use the packet just the way I used it and see if you could solve for the remaining of the change in cash for the operating section. All right, good luck.